One of the key issues that will be discussed between U.S. and China officials at this week's G-20 summit in Japan is getting a balanced deal. But how far off are we? With me in studio today is Chris Versace. He's the Chief Investment Officer over at Tematica Research. Chris, it's been too long. Welcome back.
Well, thank you for having me.
Yeah, well, lots to talk about here ahead of the G20. Will we have a resolution?
I think it depends on what you mean by that, right? You know, we're going into it, expectations are high. We've heard recently that, 90% of the deal is done. What's the remaining 10%? And remember, one of the big issues going into these conversations was the ability to claw back what was going on, right? In other words, if someone doesn't live up to their obligations in the trade deal, what's the set of recourse? So still a lot of things to go out. And remember, too, we're also hearing that we might come out of this with trade talks back on track, but no deal until later in the year. So expectations are high.
Well, some like Steve Bannon have come out saying, look, this is not something that's going to get resolved in a year or possibly before the next election, let alone a weekend.
Correct.
So you agree with this?
Yeah, I think that it's going to take more time. So to me, it's a binary outcome, right? Either trade talks are back on, and yes, we're going to work towards a deal. Okay, good. Or things didn't go well, and President Trump is going to actually go forward with that next round of tariffs.
So the Fed will closely be watching this weekend?
I think all investors and the Fed, yes, will be closely watching to see the outcome. You know, expectations are high based on the market today that the Fed will do something reducing rates when they meet in July.
Right.
I think the outcome of the G20 will really depend, will influence what happens.
Well, Powell earlier this week, though, sending another signal that perhaps, hey, don't 100% factor in a rate cut come July, and we saw how that put pressure on gold. But you're saying it really all depends on how things play out this weekend.
I think that's correct.
Okay,
yes.
so speaking about gold now,
sure.
Obviously the metal was having a great run up last week, and this week pushing through 1,400. We've come off a bit here. How do things pan out for the precious metal?
Well, I think if we look at where we are in the economic cycle, right, we're getting a lot of economic data that continues to point to a slowing global economy, slowing domestic economy. There is some concern, not in politics across the world, not just, trade with U.S. and China, but also what's going on with U.S. and Iran. And I think there's another thing that's going to happen is, if you look at the second half of the year, earnings expectations for the S&P 500 up 10%. That's a big number. Okay, we've seen expectations for the March quarter obviously contract year over year. The June quarter that we're about to wrap up, down year over year. We're starting to see expectations for the September quarter contract year over year. And I think that when we look at the backdrop that is the economic environment, the uncertainty on trade, and remember too, like we were talking, if we come out of this and trade talks are still in process, that means the existing tariffs are still on, right? I think investors are going to get nervous about expectations for the back half of the year. Flight to safety, I think you'll see dividend stocks do rather well, and I think you'll see gold trade higher. Apologies for the long way to get there. But
No, I hear what you're saying. So what are you liking right now, given this context?
Well, what we're looking for is a combination of things. One, we want companies that are poised to grow faster than that 10% in the back half of the year, or said a different way, faster than the roughly 4% the S&P will do for all of 2019. So, we're looking for companies, too, that are undergoing transformation, and we're also looking for safer harbor companies. So out of those three, for example, we like AT&T. And you might say, well, why AT&T? A, it's got a great defensive business, that is the mobile business. It's got a great dividend yield over 6%, and it's going to ramp out Warner Media, which is their streaming service. And I sit back and I look at what happened to Disney as they talked up Disney Plus. I think we're going to get the same positive pop at AT&T.
All right, Chris Versace, thanks for your thoughts today.
Happy to do it.
Thanks for stopping by.